The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the April 30th wonderful Wednesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everybody out there had a terrific Tuesday. You know what? It's now time for Wonderful Wednesday, and the best way to start our day is to have clear outcomes. That's why each morning I let you know that my outcome is to teach you how to master the tools for trading, and that includes the tools of the mind. You see, trading and investing, much like life, is all about strategy. And for the next couple of hours, we'll look at A to B equals CD patterns. We'll look at Gartley buy, Gartley sell patterns. We'll use these tactics and many others to project price because every game plan needs tactics. But here's the thing. Tactics without strategy is a recipe for failure. And failure, well, it's not an option in my playbook. I hope it's not an option in yours as well. So instead, we'll think like a strategist all day long because strategists, they slay the tactician. You know, the foundation of any strategy is a strong mind. So let's go look at one of our tools to achieve this outcome, the tool I call Think Like an Ant. You see, ants live by a four-part belief system, a success philosophy that everyone needs to live by. Belief number one, ants never quit. If an ant is headed somewhere and you try to stop it, it'll find another way. They'll climb over, they'll climb under, they'll climb around. They keep looking for another way. Folks, never quit looking for another way to get to where it is you're supposed to be. Belief number two, ants think winter all summer long. And that's really important because summer does not last forever, although it's just beginning, so that's a beautiful thing. And ants, what they'll do is they'll gather their winter food in the middle of summer. Belief number three, well, ants think summer all winter long. Now, that's even more important because, you know, during winter, and some people are going through their own winter right now, doesn't have to be outdoors, ants remind themselves that that winter will not last long. And soon they'll be out of there, and that first warm day, the ants are out. If it turns cold, they dive back down under the earth. But as soon as it warms up, they can't wait to get out. Finally, belief number four out here. How much will an ant gather during the summer to prepare for winter? All they possibly can. That, my friends, is the way to live. And that means take profits when you can as well. Never give up. Always look ahead. Focus on what you want. Stay positive. And most importantly, do all you can do. It is Wonderful Wednesday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off here. Right now, we got Dow futures. They're trading down 3 points, trading out at 16,463. S&P futures off a point and a half, trading out at 1870. NASDAQ futures down 10, trading out at 3554. Russell 2000 off a couple of points. King Dollar, boy, King Dollar is really on the move. To the downside, off 25 cents, trading out at 79.62. That means the euro is on fire. We'll go take a look at in fact, we may start off by taking a look at the currency pairs out here. Why not? We've got the euro on the move. We got the pound on the move. We got the yen on the move. We got Goldilocks on the move. This is to the move to the downside here, off $6 right now. Trading out at $12.90. Silver having some troubles. It's down 33 cents right now. It's trading at 19.16. Talk about having some struggles out here and breaking one of our tactics. One of our tactics is those rising price channels, and right now light sweet crude is broken through that rising price channel. It's off about $1.27, trading out at 100.02. Our call number is 877-927-6648. Let's take a quick peek around the globe before we go take a look at some of our charts out here. The Hang Seng last night up 6 points, kind of flat, up 0.25%. The Shanghai was up 6 points. The Hang Seng, on the other hand, down 320 points, up 1.5%. The Nikkei, somewhat unchanged, up 15 points, but on index, that's at 14,304. Really not much going on out there. And that's the same to be said in the UK. The FTSE right now, it's up 6 points. The DAX is up by 2. So quiet markets out here, maybe quiet for some time to come, up until maybe 2:15, 2:30, when the fireworks are released as the Fed releases their minutes from their two-day FOMC meeting. Well, let's start off here with silver and gold. Then we'll go take a look at the currency pairs out here. Now, if we do take a look at silver, what do we know out here? Number one, we know that there's a very small recent trend line. That trend line just simply coming off of the highs here from March the 14th. We're using that high at 21.79 as our touch point. We're using the candle formation, the high of the emotional high, I should say, of the candle from April the 10th. That's at $20.40. We know that price has been contained within that trend line. If we do see high-ho silver break through there, that would be positive. That would be very positive. Now, what's the negative side of this? Well, the negative side is that we've got a .786 Gartley buy pattern. So there's one of our tactics, right? And as you know, when a .786 Gartley pattern fails, and that's really what is in question here, that is really what we have seen. When I say fail, inside silver, and this is the continuous contract that we're taking a look at here, we got a bullish reversal sign as it made that pattern. That pattern was formed on March 27th. You get a nice bullish reversal signal on March the 28th. You didn't get follow through on the very next session. But what we also didn't get was we didn't get a failure of this pattern out here. And when these patterns fail, boy, oh boy, they can turn into butterflies. You know, it's not just a caterpillar that turns into a butterfly. It's a .786 Gartley buy or sell pattern. And when they fail, they'll crawl up a tree, they'll spin a cocoon, and they turn into butterflies. In this case here, the butterfly potential for silver, for the silver contract. Whoops, I didn't mean to do that. Let me put that back up here. That probably takes silver down into the price range. Where did that go to? I guess, that was a trend line. I don't have that. Let me tell you where it goes to. Let me just do the expansion tool. The 1.272 expansion of this butterfly pattern, that takes us into a price level of about $17.79. And $17.79 says, you know what? It would actually test the low of June 28th out at $18.18. So, unless we see a reversal of fortune here, and we know what we're looking at, that reversal of fortune is for silver to break through that trend line. Of course, we would also like to see silver not just break through that. You'd like to see it get above the swing point from June 28th. That high is 1963. Until we see that happen, we have to assume at this stage that silver wants to test at least the 1818 and probably spike down and make that butterfly pattern out there. That is what's going on inside silver. Of course, silver weaker than gold, so let's go see what something a little bit stronger than silver in the metals complex is doing out here right now. You've got Goldilocks trading off about, $7 right now, and gold also running into problems at that trend line. So this trend line here is a short-term trend line. That is a potential problem. What we're watching for is we're watching for gold to see if it can break that level. That's a trend line coming off of the March 17th high. That's out at 1392.60. The next touch point out here happens to be the trend line from April 11th? April 14th. That's out at 1331.40. We can see the last 3 days, Goldilocks has tried to poke its head through there. It had tried to do that again this morning, and it has failed. When we see gold pull its head through there, if it does, in fact, pull its head through there, the other key area for us to be watching is going to be the level of April the 1st, April Fool's Day, and that low, 1277.40. You get a close below that. That sets up an A to B equals CD down. That A, whether it's on light volume or you'd prefer to see it on light volume out there. But if it breaks through that area, that to me just says, you know what, it's going to go form an A to B equals CD. The downside, the 1-to-1, takes you to 1216. The 1 to 1.272 would take you to about the 1184 range. And so we know what our tactics are, right? We've just used a number of tools here. We've used a trend line. We've used A to B equals CD to the downside. Now, from a strategist standpoint, what is it that we're waiting for? Well, from the bullish standpoint, you're waiting to see if gold can go ahead and poke its head and close above the trend line. From a bearish standpoint, you're looking to see what happens if, in fact, gold can get below the V point. That's a 1277.40 level. So what do you do right now unless you're trying to buy a bottom or sell some kind of a top tick out here? I think you just stay patient. You know what the tactics are, and you know what the strategy is. Remember, strategists will slay the tactician all day long. Let's go check out the currency markets out here. Let's keep Stevie's promise. Let's go take a look at the euro, U.S. dollar. Boy, on a monthly basis, you talk about long-term price channels that this has finally pierced itself through. Now, in the case of the monthly chart for the euro, U.S. dollar, it broke through its descending price channel. That's the one coming back all the way to July 31st, 2008. We're using those co-located opens and closes out here. In this case, you're using as your touch point the open from July 31st, 2008. That open was at 1.5753 out there. Your next touch point out here to create that trend line, that channel line, I should say, that's the open from July of 2011. That's at the price point of 1.4500. That runs right into the close of the session on October 30th. October 31st, 2013, and that close was at 1.3582. What have we seen? We've seen the euro break through that level. We've seen the euro break through the trend line. So if you didn't use a channel line and you just simply use the trend line, you go use the high of July 31st, 2008. You'd use the high of June 30th, 2011. And this is going to be the first month. Well, of course, it doesn't end till this evening, does it? But as we speak right now, unless the euro makes a complete reversal, now, let's face it, after the Fed comes out, anything can happen. We want to watch this because the euro now breaking out on the monthly. It's broken out on the weekly. It's broken out on the daily out here. Very, very interesting, as Colonel Klink would say. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's see here. Now, we were talking about the euro-U.S. dollar before we went to the breakout here. I mentioned in the weekly chart we've got a breakout. Well, obviously, if you know the monthly chart, we're taking a look at a breakout of the trend line. It should fall suit that we're going to see the same type of a breakout inside of the weekly chart. Now, I've done a study out here, and for the last, we're in 2014. This is a study that looks at the euro-U.S. dollar over the last 20 years. And only once in those 20 years has this tactic, has this strategy actually failed. And that is during the end of the year, beginning of the year, so the end of December, early January-ish to early February time frame. So it's got that window there. It's maybe about a 8-week type of window. What the euro-U.S. dollar currency pair will do, it'll form a significant top or bottom. If you're watching this on TigerTV, and I hope that you are, you can see some yellow boxed areas. If you're listening on the radio, your mobile device, all those yellow boxed areas are just simply showing you the period, end of December to early February time frame, and it shows, significant highs or lows that are formed. Now, you have to use additional tools to be able to identify where is it that price might break to. But what we can see here, the current yellow box that we've got here, these are lows coming in at the end of January, beginning of February. You can see a nice rising price channel. Okay, that's the blue diagonal lines that are on my screen. I know you see a lot of different lines on my screen, but we're talking about the ones going from the lower left to the upper right out here. On a diagonal, you can see that that price, that's where the euro is traveling within. You can see the black diagonal line from upper left to lower right. That's that trend line that has been broken. It's been tested. That level's been tested just as the horizontal level of resistance has been tested. And prices above that, that's the bearish engulfing candle that occurred the week of November the 11th out there. That high, 138.16. The high prior to that, 138.31, really becomes your resistance area. Prices above that. Of course, the week is not over out here, but the end of the month, that's coming up here at the end of the day today. So on a monthly chart, very important to see what happens with the euro, U.S. dollar. But at this stage here, if you go back and you take a look at 19 out of the last 20 years, this is signaling to us that the euro wants to move to higher prices. It wants to get stronger out there. And Mario Draghi, he's been dragging his feet on using the printing presses and buying more bonds out there. So fundamentally speaking, I suppose it sounds like the euro could get stronger. And, of course, what's that mean for the U.S. dollar index? That means it could get weaker out here because the euro represents, 54, 55, 56% of the basket inside that currency complex. Of course, what's going on inside the other basket of currencies out here? Well, if you take a look at the Great British Pound, I think that's like about 10 or 11% out here. What we know about the Great British Pound on its weekly chart, it has broken through a consolidation level, a huge consolidation level that really acted as strong resistance. The yellow box that you're looking at on my screen out here, well, that is the projected target over time of where the Great British Pound wants to actually move up to. Yeah, the Great British Pound wants to get stronger against the U.S. dollar. This is a consolidation pattern that has been in play here basically since January of 2010. The Great British Pound finally broke out of that level. It broke out with a wide-ranging bar, nice conviction on February 14th. It did everything that it was supposed to do when you break a consolidation, when you break a rise under descending price channel, or what you like to see it do. Come back, test it, and then it acts as a trampoline if, in fact, that test is successful. And that's exactly what we have seen inside the Great British Pound U.S. dollar. What does that mean for the U.S. dollar index? It means trouble. If the euro is moving higher, if the Great British Pound is moving higher out there, that represents, 65% or so. You've got the Japanese yen, another 10% out here. Let's go take a look at the Japanese yen, see what patterns are. In the case of the Japanese yen, let's take a look at a longer-term chart here. Here's the daily chart. This has just kind of been moving sideways within this is the daily chart we're looking at, within this Gartley sell pattern. So it has actually formed a consolidation. We'll put a line across the screen out here. So it's the two black lines going across my screen that in essence become the consolidation pattern out here. So it is not as clear as we take a look at a daily chart. But let's go switch over. Let's take a look at a weekly chart here for the same thing here in the U.S. dollar Japanese yen. Now, the U.S. dollar Japanese yen, here's the rising price channel coming off of the lows from October of 2012. What we have seen here clearly is nothing more than a sideways move out here. Now, breaking a price channel going sideways is not anything to get your skirt up in the air here. It has not done that just yet. But let's face it, as we take a look at the weekly chart here, it does look like the U.S. dollar Japanese yen wants to weaken against the U.S. dollar index. But that's what's going on inside the currency pairs. We get back from this break. The markets are going to open. Looks like they're going to drop a tad. The question is, are they going to drop and then pop? We'll go find out. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races, although not really out of the gate. The Dow's down 5 points, trading out at 16,529. S&P off 3, trading at 1875. NASDAQ Composite off 15, trading out at 4,087. Russell 2,000, the weak link in the bunch, down $4 right now. It's trading out at 116.39. Apple's up a couple of bucks. Microsoft down 7 cents. Google off $1.36 right now. And leading the charge, the upside, you want to talk about ants. You got the ever-ready bunny. Must be a cousin to the ants out here. ENR is a ticker symbol, up 16% right now, up $16. Having a nice move. They released numbers out here, I believe. Let's go take a look at them. Net sales, $1.06 billion versus $1.09, so not exactly beating the top line out there. Let's take a look at their earnings per share, though, up $1.57 versus $1.35 from the prior year out here. The Energizer Bunny, Energizer Holdings on the move top side this morning. You've got Aspen Technologies, AZPN is a ticker symbol, up a nice 17%, up $6 and change, out with net income for their third quarter of $20 million versus 10. Boy, that's a nice double. Let's see what they generated revenue-wise. Revenue-wise for the third quarter looks like $103 million versus 79. Very nicely done out there for Aspen Technologies. I seem to recall that stock chart looking pretty nasty. We'll take a look at it, but could be wrong. Could be a different could be something else. These folks, they optimize software solutions, and I think this thing had really taken a dive, hit the mat. But we'll go find out if that's the case. You got LogMain, LOGM is the ticker symbol, up a nice 20% here this morning, up $7 and change. Log me in, I suppose. Sorry about that. How do you like that? Log me in, not LogMain. You'd think I was ordering shrimp chow mein or something. In any event, their Q1 revenues, $49 million versus $37 million. Nothing wrong with shrimp chow mein, by the way, either. You've got earnings per share 4 cents out there versus a loss of 24 cents. So they're having a nice morning. Level 3 Communications, LVLT, up about 11%, up $4 and change. Also out with numbers out here. We've got U.S. Silica Holdings out there, SLCA, up 10%. Garmin has found its way. It's up 7.5%. It's up $4. They generated net sales of $538 million versus $531, so they beat the top line in their first quarter. Net income was up nicely out here, 118 versus 88 out there, so they are being rewarded. To the downside, we've got Power Integration Solutions, so leading the charge. The upside, you got Energizer Holdings, and to the downside, POWI, Power Integration Solutions, off 30% out here. Man, somebody ate their lunch big time. Net income, $12 million versus $10.9, so it's not a net income issue. Their revenues out here, $83 million versus 77. They must be guiding that they are just simply running out of power out there. We'll take a look at that stock chart. Panera Breads, PNRA, that's down $11 out here, off 6%. Let's see what Panera Bread is out with from a number standpoint. Revenues of $605 million versus $561. So they're beating the top line. Bottom line, $42 million versus $48. Not too bad out there. Nonetheless, they are down, perhaps with volume as well. Vistaprint, VPRT, apparently giving giving out too many business cards for free. Down 18% off, $9.50 out here. Revenue looks like for their third quarter, about a 1% decrease. Not too bad. 286. Looks like about 286 million out there. Of course, consensus looks like that was about 310 million. So in one sense, that is a miss to the top line, and they're getting hammered for it. FEI company, FEIC down 10%. Biogen BIIB off about 2% this morning, down $5 and change. RM Regional Management, they're trading down about 28%. Yikes almighty. RM, what do they do? I don't know what they do out here. Let me see if the system loads. I don't see what is behind the move. Must be some earnings that just haven't been updated on my system. They're a consumer finance company out here, and they're getting just trash this morning. And Express Scripts, ESRX, that is up down 7%, I should say, off $5. Twitter tweeting out that it's not doing as well as it needs to. I think everybody in the stock is now pretty much in a losing position from its IPO. It's trading out at $38 out here right now. Auxilium, probably should not have chosen that. AUXL is the ticker symbol, just simply from a pronunciation standpoint. It's off 14% this morning. Not a lot of movement in the markets out here. The composite showing a little bit of a weakness. Well, the composite and the Russell 2000, it's the same game out there. Russell in the 2000, fighting off the New York Stock Exchange, fighting off the S&P, and fighting off the Dow. Remember, there was a stock that we were taking a look at yesterday before we go take a look at some of these equities out here. ATK was the ticker symbol. I said we keep it on our charts out here because it was threatening to potentially form an island reversal. And the reason why I wanted to look at that, because if you're shorting stocks, you want to be shorting those, $100+ stocks, $200, $300 stocks. Why? Because when they fall, you've got a much larger fall. That's why you don't want to short something that's selling at $14. Now, if it happens to be an inverse ETF or, a wide swath of the market, 100 stocks, that's a whole different story. But an individual stock, this is really what you're looking for. Now, the low of yesterday's session, this thing was up, pretty nice volume. Actually was, so you've got divergence here of patterns. It took out a B point. It did it with light volume. The B point yesterday was, or still is, yesterday, today, will be even tomorrow. That is the April 4th high, which is at 147.84. 539,000 shares. Let me just refresh my screen. Just make sure I've got all of the data out here. I don't want to give away any bad information. Oh, no, okay. Well, now, oh, man, that just totally wrecked my chart out here. Now what happened? I got some bad data. Now what am I going to do? Hey, always have a backup plan, right? So you got what? In the trading day, you've got 6.5 hours. So that would be, 390 minutes. Yeah, 390 minutes out here. Let's see if I can pull that up. And if I can't, well, then I'll just simply, come on, baby, work for me, would you? Give me a little, cut me some slack here, would you? If it doesn't cut me some slack, well, I always have another chart system I can go and take a look at it on. How about that? That would truly be, so the heck with it. Let's go take a look at this. So we're looking at ATK. Let's go ahead and put this up on my screen out here. Let's go see what this stock chart would look like. Let me switch over to, can I put it here? Yeah, I can put it here. Let's go take a look at it. ATK is the ticker symbol. Let's pull that up on the screen. Let's see if what this looks like here. And let's take a look at the daily. Let's not take a look at the weekly chart, because I believe that what this has formed here is a island reversal pattern. Well, it may. Let's go find out now. The key here, and we won't know till the end of the trading session. It looks like that is not the case out here, because I see now the low of yesterday, 148.14, and the high of today, 148.14. All right, so we'll continue to keep an eye on that to see. It still has the opportunity to form an island reversal, but it has not as of yet. So false alarm fire out there in the ticker symbol. I don't even remember what the name of it is, ATK. In any event, let's go take a look at some of these stocks here that are moving and grooving in the marketplace. Let's go see what we've got moving downside out here. So give me a moment. We'll switch over to a different tool. Let's go take a look at Power Integration Systems. POWI is the ticker symbol. Let's see what it is doing. It's trading out right now at $41.21. Is this an IPO? No, it can't be. What do I have? What do I have going on the system out here? There we go. So gapping down with huge volume. Man, oh man, let's go see what this thing is trying to do out here. This is up. Talk about volume off of highs and institutional selling. This is called the unload going on inside this. Now, it should have some pretty decent support right where it's trading into. So if you look at this stock has broken out at this price level a number of different times. Now, it's a daily chart, so I'm going right now back to May of 2012. And nice breakout, wide price spread, accelerated volume, 1.8 million shares. The low there about $38.62. You saw another breakout above that. That does not mean that it didn't make a lower low out here, because it most certainly did. If we take a look at the little breakout here from February 5th, 1.2 million shares as well. You can see how this area is where price is traded back into. Now, the problem here is that the kibosh is on. Kibosh from a volume standpoint, 1.1 million shares out here as it gapped down into that area. So we'll see if the bears can just simply, the selling pressure will just simply continue the onslaught here. Let's take a look at a weekly chart for this equity. Boy, talk about taking back a lot in one day. This thing, in essence, is taking you back into, July of 2013, June of 2013, all at one. So if it breaks through this area, the next area for it to move down to is about the $27.20 area. That is on Power Integration Solutions. Let's take a look at Panera Bread. Let's go see what they've got cooking in their oven out here. PNRA is a ticker symbol. It's off 7% right now. It looks like this thing is gapped down. Again, some more institutional selling inside Panera Bread. It has had institutional selling inside this equity for quite some time, since July of 2013. In fact, price made it right back to the area where it had broken down from, went just slightly higher. That was back July 22nd, 2013, around the 187 level out here. Right now, Panera Bread is taking on the swing points and a sign of strength and a gap up that takes you all the way back into the time period of July of 2012. Yep, July of 2012. Basically, right now, this thing has done nothing. The breakout session in July of 2012, the 25th, was 3 million shares to the upside. That looks like an area that, in essence, is being tested as we speak right now. We'll see if that area can hold. Last time down here was with a volume of about 1 million shares. Of course, the prior day was a breakdown and a gap of 3.5 million shares to the downside. So far this morning, 373,000 shares. Panera Bread, perhaps this is nothing but a large consolidation pattern out here. We'll just have to see how this actually trades today. We've got Vistaprint, VPRT. If I type in the right symbol, then we'll go ahead and be able to see what this is doing. Let's clean off the screen out here. Let's start from Scratcher Rooney, and this thing gapping down, taking out a B point, doing it with volume. The B point of an A to B equals CD to the downside. February 5th low, $45.33, 394,000 shares at that B point. Done 587 today. Let's take a look at some price projections out here for Vistaprint. Vistaprint already almost completing the 1-to-1. That means it's going to move lower, should move lower. Looks like Vistaprint wants to take a run. Oh, here's where Vistaprint wants to take a run to. Vistaprint wants to do more than a 1-to-1. A to B equals CD. Looks like about the between 1.272, 1.618 area. Big high volume bar down on March the 1st, 2013. $33 to $35.16. Looks like that is where Vistaprint is headed to. That is a stinger out there. Let's take a look at some stocks here. Moving to the upside, moving in, grooving. Let's go take a look at the Energizer Bunny out here. ENR is the ticker symbol. Let's go see what that is doing. Up a nice 16% here this morning. Looks like up with some big volume behind the move, taking out its recent swing point high, which is from December 2013. December 19th gets up to 113.16, 644,000 shares today. It's already done 1.4 million shares out here. Let's go take a look at a larger pattern out here. Let's take a look at a weekly scenario out here. Boy, this thing is looking pretty darn okay. Here's where it's headed to. So it wants to get all the way back, wants to make a 100% move of a move. In this case here, it takes you back into October of 2007. October 12th, the week of October 12th. That's at 119.60 out there. Looks like that is where the Energizer Bunny is headed to. Let's go check out Log Main. I'm just kidding you. Log Me In. LOGM is the ticker symbol. I used to own a Chinese restaurant. Yep, believe it or not, I started the Domino's Pizza of Chinese food in Orlando, Florida. That was many years ago, 25 years ago, more, at least 26 years ago, probably. In the case of Log Me In, let's go check it out. Enough babbling out there, like a babbling brook sometimes out here. If we take a look at Log Me In, right now it's 260,000, 270,000 shares. To the upside, trying to take out a swing point out here from March the 18th, only 299,000 shares. If it gets above 47 to 57, you'll have quite an A to B equals CD to the upside out here. And it's going to try to take out the highs from April the 1st, 3.9 million shares. So that's really where it may run into a little bit of an overhead supply. Let's right here. This is the trading session. Log Me In was logging people in and then logging them out on April the Fool's Day in 2011. Had a nice move up. Was 3.9 million shares. Got up to 49.50. That looks like it's the next target out here. And then it kind of fell off the face of the earth. Went from that 49.50 level and decided to go ahead and make a run and log people out all the way down to $16.51 out there. That was on the trading session in February of 2013, February 15th. Nonetheless, I suspect what we will see is this, even if it does move higher today, it will likely run out of steam at about 49.50. Yeah, we're taking a look at stocks because there's not a lot going on inside the general indices out here. Dow's up 10, S&P off 1, Russell 2000 down 7, Composite off 18 points. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Markets are, slightly red out here with the exception of the NASDAQ Composite and the Russell 2000. A little bit more than slightly red. But let's take a look at the NQ, the monthly chart here for the NQ. Next hour, we'll take a look at the indexes out here. If we take a look at the monthly chart for the NASDAQ futures, actually no bearish pattern as we speak right now, even if the month were to end just like that, even if we were to stitch together the last two candles. So no reversal signal here, not as of yet what would be required here today, and we could see that would at least be a close below. The number is 35.14 out here, but otherwise on the monthly chart for one of the week indexes, really not too shabby out here. Still holding up pretty well. Let's take a look here. I'll switch this to the weekly chart as well. Obviously, things turn quicker on a daily, and then a weekly, and then a monthly chart out here. If we take a look at the weekly chart out here, we certainly see some selling pressure. Last time we saw this selling pressure was back in June of 2013. Of course, we're using the Rhodes momentum indicators out here. Had nice little price relative strength divergent pattern. You got a confirmation of a sell signal. That was back on March 14th on the weekly charts out here. In order for the NASDAQ on a weekly chart to break this little sell signal that it has given us, you would need to see a close above the April 11th high out there, the week of April 11th, and that's out at 35.99.50, so about another 50 points higher out there. So we'll watch and see what kind of fireworks take place today. That will help. And of course, the week is not over in the case here inside the NASDAQ. The monthly chart, that comes to an end. Let's switch over, take a look at the Russell 2000. So we're looking at the weak hands out here. Then we'll go try to factor in the strong hands just to see the little divergence that we've got going on. I'm going to switch back here to the monthly chart. This is for the Russell 2000 futures contract, the continuous contract out here. Other than last month's candle, I should say, the month of March, a high wave candle, looks like a doji, smells like a doji, but was not a doji candle out there. Just a candle that says it's lost its way. At this stage here, it is not totally bearish at all. If we were to see it close below 1077 today, near at 1109, so that would be doable. That would be quite a bit of destruction in the market. But right now you're off 10 points. No reason for it to not be able to actually do that on some really bad fears in the market. That's what I would be looking for. So the monthly chart still holding up pretty well. Of course, if we go switch over and we take a look at a couple of let's take a look at the ES Mini out here. Let's take a look at its continuous contract. Let's go see if we can find anything that looks bearish here. And the answer is, well, no. Right now, if it closed like this at 1867, that would be a high wave candle. A slight tick lower, maybe about the 1866 mark, you get a little doji candle. Look, in this case right now, it's just saying that it's lost its way on the way up. Last time we had a high wave candle inside of the ES Mini, well, that was back in the December time frame of 2012 out there. The trend inside the S&P futures, absolutely bullish on the monthly chart, no matter how you dice it and slice it. If we take a look at the Dow futures out here, we'll finish off the show. Take a look at the Dow futures, and there is absolutely nothing bearish about the monthly chart for the Dow as we speak right now. So, folks, stay tuned for the Money Master Show. If you're off to start your wonderful Wednesday, do have a wonderful day. Make sure you know what your outcomes are out there. At least have one outcome, something you want to accomplish today. And thanks so much for joining us. Right now, we've got the Dow. It's off about 10 points. S&P is off 5. Thanks so much for joining us, folks. Look forward to seeing you soon. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.